Hey, it's Captain Matt, Boat Buyer's Secret Weapon, with the winter 2023 market update. It is almost Christmas, December 22nd, I believe, and we are doing the market update. So here's what we're going to talk about. We're going to talk about where the boat buying market is, what's happening in the industry, what's happening in the overall economy, and how you can use that if you're buying a new, a used, a brokerage boat in the next 3, 6, 12 months or so, and kind of some of my predictions from an insider standpoint. So as you know, this information is unbiased. I don't take any money from manufacturers. And so this is just my own personal opinion on all of the data and me being involved in the industry, talking to buyers virtually every day. And matter of fact, just got an email from a guy that just closed on a boat I helped him with the other day. So these are the numbers that we're looking at. This is as of September 2023, the most recent data we can see, and we notice that the number overall for the industry is down. Now, it's only down 7.5%, which was kind of surprising to me. I felt the way things are talking, the way dealers are responding, I thought that number was going to be more. And when you look at it segment by segment, you're really, I mean, they're all pretty close to the same. The wake boat, ski boat market is off by almost 21%. But it's down. We were up 10% in the pandemic. We're down 7.5% as of September, and that number is probably about the same going into November, December. The one interesting thing, I'm not sure what's going on here, but the personal watercraft market, your wave runners, jet skis, Sea-Doos, Yamaha wave runners, is up 25%. I don't know if it was in 2022 there were supply chain issues, they just couldn't get them out, or if there's something happening with that segment of buyers, because they are a little bit different in my opinion. But that's an interesting thing. So what are we seeing at the dealer level? So their trend in retail trends, so kind of their level of inventory is what this is really gauging. And if you look, about 60% feel like their inventory levels are too low and their sentiment is down. About 20% is up. And if you look since January, the first of the year, that's trended pretty significantly down on new boats. Not surprising. Same thing on used boats, or even more, about 70% maybe, about 15% on the positive. And again, trending pretty far down as of July. So after the summer, that went down. This is their overall sentiment of here. This is what we expect in the future. Now, this is coming from boat dealership owners for the most part. Current condition, well, it dropped way down in January. It bounced back up in April once the season kind of kicked off and flattened out. This is what we kind of expect for the coming months. So we're heading into summer, and this was as of August, I think, is the most recent 3 to 5 year outlook. Again, if you look, it's trended down since January. And, the dealers, there's a lot of concern. The economy, the presidential election, the interest rates, the cost of boats. And this is what a few of them have had to say. So many dealers in the Northeast, so this is a Northeast data, nearly 90% of dealers said inventory was too high. No respondent said it was too low. So in that market area, we've talked about the regional impact of the economic impact, the weather, the levels of inventory. Northeast, fairly heavy with inventory. This is another one, establishing realistic trade values and partnering with boat builders on incentives. So there's two things. One is they sold a bunch of boats over the last 3 years at super high prices. And as people are coming in to want to trade them, they have to be really smart about not putting too much money into those boats and getting a boat that they're not going to be able to sell at even break even or a profit. Now, as a consumer, this is what they're thinking as dealers. As a consumer, if you bought a boat, understand if you go in to trade it in the next 6 months, that value is going to be significantly less than what you're hoping for. It's never high enough, right? If you're trading something in, they never give you more than what you're hoping for. But just be ready for a value that might sting a little bit. And also partnering with boat dealers on incentives. Now, at the very end, I'm going to talk about some actual financials for dealers and manufacturers that are publicly traded companies and give you my take on those. But the dealers are saying, hey, manufacturers, you need to help us move this inventory. We need incentives in the form of rebates. So that is kind of what to expect. the inventory levels continue to stay high. Days in inventory is a very big marker for the health of a dealership. You want the days in inventory to be fairly low. The average since 2019 was about 200 days. We hit that it was probably May or so, but I don't have the updated numbers, but my gut, my instincts is that it's only continued to rise. It's probably 220, 230 or more now, keeping that same trajectory. So that means the inventory is losing value. It's a depreciating asset, right? And the interest payments and curtailment, the cost for them to own that is going up. So the value is going down, that cost is going up, and that's why dealers have that sentiment is one of the things. So what are we seeing? We're seeing manufacturers stepping up and saying, hey, dealers, we're going to help you move this inventory that you've already bought from us. Monterey, up to $20,000 rebate. Centurion, $20,000 rebate. Manitou, $10,000 rebate. Enter in the manufacturer. They likely have a rebate. Now, those numbers are for the models that they want to move the fastest. So usually the higher end, higher value models. And it might be their base model may only have a $500, $1,000, $2,000 rebate. They're always going to advertise the big one. You're not just seeing it on the manufacturer side. Boat clubs. This is an email or text message I got from a boat club, Freedom Boat Club. They're giving a $200 value package, life jackets, inner tubes, it looks like. And they were saying, hey, we're going to do $2,500, no dues until April 1st. And then it's only $490 a month if you're all week long, 2 weekends, and $290 a month if you just want to do it during the week. And you get that package. So they are also trying to keep the membership levels up to their clubs at a high level. What's going on in the macro economy? So that's kind of what's happening on the dealer level and what you're seeing. You probably are seeing some of it. What's going on in the overall economy? Well, the consumer price index, the prices that we pay, inflation, has just gone up since 2014. That big spike that we saw, that line going up especially quick from 2020 to 2022. And then it sort of leveled off, as somebody very astutely reminded me in the comments of my last video, is it's cumulative. So it's not just because inflation levels out that the pricing pressure has gone away. It's pushed the prices up, and now the prices are just stayed high. Deflation is going to bring them down. We aren't seeing that, and I don't think we necessarily will or want to, but that's over the 10 years. Gas prices has been a big part of that spike in 2020 to 2022. Energy was a big one. You can see that's fallen back down, leveled off, $3 a gallon according to AAA as of December 17th. What's it cost? So this is the producer price index. What is the cost for the manufacturer of goods? So the raw materials, the resins, the fiberglass, the upholstery, the foam, the engines, the metal, the aluminum, all of that stuff. You can see the inflation, boom, ticked way up to 2022, fell down a pretty good bit. The red line is the total. The blue line is you take out food, energy, so that petroleum, which is huge in fiberglass boats. Petroleum is a big portion of the resin. And then the trade services, so labor, essentially. So in the boating, the labor and petroleum are big chunks, especially in the fiberglass market. And you see those are coming down, which is good. A little bit of a tick up and then another drop down here. That should mean that huge increase in pricing that we saw in boating over the last 3 or 4 years, that should level off. I don't think it's going to come down, but it should level off because all of the raw materials are coming through. They're in the boats in the 2023 season. The 2024 season, we'll start to see this cost of goods sold. And again, when we look at the financials at the manufacturers, you'll see exactly why that's impactful. If you're looking to buy a boat this year, grab the toolkit. It's a 40-page now toolkit that it's currently free. We're going to start charging for it in the season, probably $27 or something like that. Pretty cost effective, pretty cheap for what you get. Now, what's going on with interest rates? As interest rates have pushed up, what's happened is boats have become more expensive for those that don't want to or aren't able to pay up front. So recently, the Fed had a meeting and they reported out that they didn't say this specifically, but the sentiment was we're likely not going to increase rates anymore like they've had the last several and push the Fed fund rate up, which is the rate that banks borrow from the government, which sort of translates, not direct correlation, but translates to the interest rate you pay on loans. They said, not only are we not going to push it up, it's likely that we're going to drop them back down over the next year. So when's that going to happen? I don't know, but the market reacted very positive. And if you look at this is Freddie Mac's mortgage interest rates, 30-year fix were up to almost 8%, 7.75% probably, dropped down to just below 7. The 15-year was at, at 7 and has dropped down to probably we'll call that 6.38, 6 3/8. So we're seeing the interest rates come down. You're not going to see it in boat loans yet, but according to what the projections are, likely see boat loan interest rates come down maybe mid-year or so. So that could be a positive thing if you're looking to finance the stock market. So most people buying a boat have a portfolio. I know for me, in the last year, the last 2 or 3 months, I've seen my statement in my 401k, our portfolio was going down. This dip right here. It has since come way back up. And now, if you look at the trajectory for the year to date, up 23%. And this is the S&P 500. So it's a good marker. So short term, people's portfolio that are likely to buy boats, likely have money invested in the market, have good solid returns. It's easier to write $100,000, $200,000 check when your returns on your investments are positive. Over the last year, they've continued to go up 2,300 points from 5 years ago to today, almost 100% return from the market over the last 5 years. So that's probably 15% or so year over year because it's cumulative. And so we're seeing that, hey, there is some wealth being built. Home prices, all of that is adding to the comfort level of the top, we'll call it 25% or so, the people that are buying boats, people that are listening to this. Now, what's happening on the bottom side, it's a totally different story, but the folks that are capable to buy boats have the money, which is kind of interesting. And you're seeing that when you talk to dealers, they say, we're having a lot more people write checks. But what's the demand actually look like? So this is from Google Trends. This is the number of people that have searched boats for sale. So if you look, pandemic, it was huge, right? Everybody was looking to spend some money. We had free time. The government was giving away money, came back down, bounced back up, not as high. And this is not a specific number. This is as a trend, a range relative to each other. Bounced back down again, came back up to about the 2019 level, a little less. 2023 was even less than 2022. So what does that mean? Well, let's look at the number of boats sold. You can kind of see the trend over a 10-year period now, or actually this is since 2004, so a 20-year period. You can see that pandemic, it slowly crept down. This is 23. If you follow that line, that's about 2014, where 940,000 new and used boats were sold. Go back to 2006, before the mortgage meltdown in 07, 08, 900,000 boats sold. Okay, so what that tells me is we're probably going to be around 900 to 1 million sold when the final numbers come out. I was only able to find 21 numbers, 22 numbers weren't there, and I would expect to see that trend dip down a little bit more if interest rates come down, if the election isn't too crazy, and we're not in total chaos with all of the political spin and rhetoric. Probably see a slight decline, 900,000, 800,000 boats sold overall. Kind of my projection. So what are we seeing on the marketplace? If you've been watching these videos for a while, we've been tracking it for a year and a half now. Boats sold 200 miles from my zip code in near Charlotte. About 2,000 boats for sale on Boat Trader. This is December 17th. If we go back to August, we had 1,700. So about 300 boats added in my market area, $10,000 to $75,000. Okay. In May, we had 1,500. In April, we had 1,000. February, we had 1,100. October, we had 1,400. And so we're seeing more boats on the market. Now, this is used boats, okay? We'll look at new here in just a second. What are we seeing on the price drops? Well, 242 boats in that same search within 200 miles of me have dropped their price recently from where they started to where they're at. Last month, our last review in August, that was 480. So less than half, or about half, we'll call it, less are price dropping. What that tells me, and this is May, 296, October, 300, January, 175. That's telling me is I think people are more accurately pricing their boat out of the gate. They're not putting it way up there to see what they can get. They're coming in with a more reasonable number and holding firm there. We got our Boat Buyers Academy. If you want a little bit of extra help in buying your boat, check that out. But this is important. If you're looking to buy a new boat, this is 1,000 miles. So this probably goes from the East Coast all the way into like Nebraska, Iowa, Kansas, maybe into Texas. 2020 leftover models. So these are new boats that are for sale by dealers that are leftover, almost 3,000. When we did this last review in August, there were 4,370. So we've sold, 1,400 boats since August. This is the opportunity. If you're looking new or you're looking a newer pre-owned boat, might be an opportunity to find one of these 22 leftovers. Just go and you can search it in Boat Trader. You can search for those new boats. They're going to have the biggest rebates, the biggest dealer discounts, full warranty, brand new boats. Now, they may have some nicks and dings because they have been around for almost 2 years now, depending on when they came in, but could be an opportunity to get something pretty close to new or brand new and a huge, huge discount, right? So 23 leftovers, we're at $33,950. Now, sometimes these boats get double listed, so that number might be a little off, but it's about a little more than 10% of the total number of new boats that were sold last year. That number is about 250 to 300,000, right? Dealers want their leftovers. They want a couple leftovers because that way they're not leaving money on the table in that selling season. If they run out of boats after 4th of July, well, they can't make any more money. But if they have a few extra boats that they don't sell and they have to carry into the following boat show, they maximize their revenue and they want about 5, maybe 10% at the most, kind of that leftover, depending on the specific strategy of the dealer. So this number, it's a little higher than what most dealers would want kind of as a overall, but it's not crazy out of line. Now, dealer by dealer, it's going to vary. Some dealers are way out of line of where they want to be, and others are sitting really good. So if you find those dealers that are heavy on inventory, again, might be a great opportunity to negotiate to get incentives from the manufacturers and discounts from the dealers. Okay, so my projections, kind of the wrap up, but I've got the financials for you, so don't go away because I think these are really interesting. There's 22s out there. If you're looking new, look for those first if you want a good value. Now, you may not get the color you want. They may not have the exact options you want, but there's discounts. 23 boats in stock, discounts again. More likely to have the options in the color that you want, but you got what you got, and that's why you're getting the discount. Don't expect discounts on 24 models. If they have 22s and 23s in stock of the model you're looking at, they are unlikely to discount that 24 model much. The manufacturers probably don't have much of a rebate on that model because they want that aged inventory to go first. That's costing them real money by keeping those interest payments, curtailment payments. Like, they got to pay their principal and interest just like you and I do on a loan. The dealers are writing $30,000, $40,000 checks a month to pay for the millions of dollars of inventory they have. They don't like that. They want those boats to go. Okay, rebates will continue to grow on leftovers. We'll talk about one place that's going to be a great opportunity. Boat loan rates likely to drop slightly. I don't see them falling off the table, but I do think that come April, May, June, probably likely to see lower boat loan rates, which is good. Used boat prices are going to continue to see depreciation, so they're going to start coming down. There's still some that are way out of line in the pricing, but I think that's getting better. I think dealers and individuals are realizing it's not the pandemic anymore. I can't sell it for more than I bought it. You got to be realistic if you're serious about selling it. And The more discounts on those new boats, the faster the depreciation on the used boats, right? It's sort of a trickle down. If I can't afford new, I go used. But if the new starts to become more affordable for me, I'm going to buy that over a used boat in a lot of cases. And remember, if you're in those hurricane zones, insurance is likely gotten more expensive. I've heard increases of 20, 30, 40, 50% in some boat styles and some locations, okay? So just pay attention to that. Get your quote. We offer partnerships with boat lenders, with marine lenders and boat insurance providers. So if you go to the website, you get the toolkit. What we'll do is we'll run you through our program and we'll match you with the one that makes the most sense. They're vetted. They may not be the absolute rock bottom lowest, but they're going to give you great service. They're going to be honest. They're ethical. And they're going to give really, really competitive. Maybe they'll be the lowest, but that's not why you would use them. They're going to take care of you. So boat shows. Boat shows are kicking off. The first one, I think the Cleveland Boat Show's coming up. The Charleston, South Carolina Boat Show's coming up in January. That is a great time to get the pick of the litter of those leftovers before the spring boat buying frenzy. Manufacturer reps are going to be on site in a lot of places with a pocket full of money to give away for extra incentive. Dealers would much rather sell that boat in January for a bigger discount and not have to pay those interest curtailment payments. They'll likely throw in some extras. So those boat shows, attend them if you're a serious buyer, and they could be great opportunities for tremendous value, okay? Remember, you want to negotiate. We've got our negotiation portion of the First Time Boat Buyer Academy that saves people thousands and thousands of dollars. We'll likely do the same for you, but that's all included in that academy. But negotiate at the boat show. You've got their competitor sitting right across the aisle from them. It's a great opportunity. The pick of the leftovers. It's a fantastic opportunity as a buyer. Okay. Now we mentioned the financials. What I did is I pulled not all the public companies, the major public companies to see what's going on in the market, because there's an inverse line. Dealers, if we look, this is MarineMax, the largest dealer group. They've got 80, 90 dealers across the U.S. They also do some other things, but this is mostly boat sales revenue. 1.5 million in 2020, 2 million in 21, 2.3 million in 22, 2.4 million in 23. Okay, they closed their year in September, and if you look at their interest expense over that time. They were selling boats like crazy. They weren't holding them long. 9 million, 3 million, 3.2 million, 53 million in 23. So that interest that we talked about is eating into their profits. That's why they want to discount these boats and sell them, because a lot of times that's cheaper than keeping them. Look at their profitability. 2020, 100 million in profit. 21, 209 million, almost double. 265 million. And then down to 200 million in 2023. 24, again, it closes in September, is likely going to be down again because the interest payments. Let's look at OneWater, one of the next largest. Million in revenue, 1.2, 1.7, 1.9, going up. Their interest, same trend, 17 million, 6.9 million, 17, 59 million. They close in September as well. EBITDA, this is the money they're putting in the pocket. Earnings before interest, taxes, depreciation, amortization. Look at their earnings. 75 million, 154 million, 229 million, 41 million. I mean, it was up and then dropped off a cliff, right? Their cost of doing business has gone up just like everybody, and their interest is eaten into that profit, okay? So what else is happening in the dealership world? Well, Camping World, I saw this come across my Facebook feed. They're looking at acquiring dealerships. It's under the brand Overton's. Overton's is owned by Camping World, which is owned by Marcus Lemonis, a big entrepreneur. He's got a lot of businesses. He bought Camping World a number of years ago. They just introduced the Napalo pontoon line, a joint venture with South Bay Berkshire Trifecta, with that building group, and they're badging it Napalo to compete with Bass Pro Shop, the Sun Tracker. It's kind of that model. They're promoting it as a nicer, more luxury, but it's kind of that entry level, maybe a step up. I haven't seen one yet, but that's kind of what I'm gathering. So that's an interesting entrance into the marketplace. They're looking to acquire dealerships, compete against MarineMax, One Water, Bass Pro Shop, right? Now, quick about Marcus Lemonis, because I want to plug him as a really, really good human being. So my nephew, Wyatt, has mitochondrial disease. It's a version of it that he is blind, on a feeding tube, in a wheelchair. He is 11, 12. I don't know if he's 12 yet. 11 years old, and his future is not good. And he loves campers. Since he was a little kid, he and my mom build campers out of popsicle sticks. Mom's building them now because his dexterity isn't as great. But some friends of my sister and brother-in-law did a fundraiser so that they could buy Wyatt a camper. He's been saving his birthday money, his Christmas money, all of his money he's been saving to buy one. Somehow it got on Marcus Lemonis' radar, and he set up a call with my sister and brother-in-law and said, "I want to help out. I've got campers, you're getting one." And they coordinated. He didn't do a big PR campaign. There weren't cameras there. There weren't newspapers there. He just stepped up and gave it to Wyatt, which I came home for my brother's birthday, and right after he had gotten it, he was so proud to show me his camper. We sat in there. I had a beer. He was just smiling away and telling me all about it, their first camping trip. So, Mr. Lemonis, thank you for that. That was incredible. I wanted to put that story in there. I thought it was interesting that they were buying, but I wanted to put that story in there because it meant the world to my sister, my brother-in-law, and Wyatt and his sister as well, and me. So let's look at the manufacturing side of it. So this is Marine Products Corporation, which is Regal and Robalo. So we saw dealers' revenue just skyrocket and then fall off a cliff, right? On the manufacturing side, look at their revenue. This 2020, 239 million, 300 million, 380 million, 420 million on year to date. So that they're going to be closing out here in another couple of weeks. Look at their EBITDA, 24 million, 36 million, 51 million, 58 million. Theirs is still going up because remember, they were being held back by supply chain issues and trying to get the boats out, right? So they were held back by that constraint where the dealers were making more profit on every deal because of this demand and the supply was low. Prices were going up, so their revenue was still going up. Their margins grew and they made more money. Now, prices have started coming down. Interest has gone up and their profit is going down. Let's look at Brunswick. Now, you got to remember they've got Mercury and Mercruiser and several other divisions, but boat sales is a big chunk. 900 million, 4.3 billion, 5.8 billion, 6.8 billion, 6.6 billion. Okay, so now they made an acquisition in here that jumped up that revenue. I don't remember what it was specifically, but look at their EBITDA: 200 million, almost 700 million, almost a billion, 1.1 and a billion year to date. That'll probably go up, be close to the 22 numbers. So again, there is going up. We talked about, well, let me do Malibu. So Malibu is, and Brunswick, if you don't know, Sea Ray, Harris, Boston Whaler, Crestliner, Lund, Lowe, bunch of different brands, Mercury and Mercruiser, and then some other businesses as well that they're into, as well as finance. They do boat loans as well. Malibu is Cobalt and Malibu, and they've got one other, but it's escaping me. I don't know why. Let's look at their revenue. 650 million, 900 million, 1.2 billion, 1.3, almost 1.4, 1.3. They closed their year in June, so the trend's a little bit different. But again, EBITDA, 93 million, 158 million, 220 billion, a million, 150 million, 154 million. Okay, so again, that's going up. So the dealers are now sitting heavy in inventory. They were making hay during the pandemic. Now they're starting to get in a tight spot. They're asking the manufacturers, hey, now you're making all the money. Why don't you help us out, move this inventory so we can buy the 24s and then buy more 25s when it's time to do that. And June, July, August is when they start to place their orders and start thinking about that. So it's kind of a fight between dealers making too much money, manufacturers making too much money, and they're going back and forth. But that's why right now the manufacturers are willing to put some money in to move that, because they want to run their factories at full capacity. They're much more profitable when they're running at full capacity. You can see that by the numbers going up when they were hitting that capacity level. So that's what's going on in the financial markets. Now, you scale that down to the smaller privately owned ones, similar trends are going on, right? So that's what's going on in the marketplace, in my opinion. Grab that Boat Buyers Toolkit. It's super, super valuable. Subscribe to the channel. And we talked about there's no money coming in from manufacturers swaying my opinion one way or another. So this is just unbiased information. The only way we're able to do this is if you support the channel, investing in our training products, which are incredible, backed by a money-back guarantee. You can join and become a member of the channel and support the channel that way. Number of ways to do it, but I want to provide value and I want to keep doing it, and I can only do that with your support. Thank you very much, and remember, life truly is better on a boat.